your next home. This is the perfect room if you're looking to expand the family. It's perfect. There's a kid's room or a playroom.
Did you say playroom?
Yeah, playroom.
It's not been very bad.
You know what, let me give you a moment. I'm gonna feed the pancake.
Yeah, you go feed
Okay.
the... whatever.
Tips for dealing with the bank. So perhaps you're renting in a property where it is run by a body corporate.
Understanding the basic calculation, income minus expenses, and you want to be left with a positive income.
It is a very tough game. It's not easy at all.
To stay ahead of knowing exactly what your clients need, what their teething issues are.
Have a joint move-in inspection.
That a lot of people that are coming into sectional title homeowners associations are just like you described, not only first-time homeowners, but first-time owners and residents in community schemes.
They get to see the perspective from the other side of the aisle. And I think that's a really important thing to do.
It's a market that's estimated to be transacting at least 9 billion rand per year. So it's a huge market.
In order to get there, you need to be able to build up a track record.
Your cash flow model needs to be sharp.
A quote comes to mind. The best time to buy a property was about 10 years ago. The next best time is now.
Good evening and welcome to episode 59 of the Private Property Podcast. I'm your host, Zama. It's the Friday edition of the show. I always say I don't know if that makes any much of a difference because so many of us obviously staying home, staying safe. We're not out partying or doing anything that we would typically do on a Friday evening. So I do hope that there is a bit of a difference. Of course, you are tuned in watching the Private Property Podcast, where we talk all things property. We try to help each other out, certainly as property investors. Perhaps you're even a tenant or a buyer or a seller, and you want to get to know more about property because you either want to grow your property portfolio or want that foot into the property ladder. This is the show certainly for you. On this Friday's edition, this is what's on the menu. We're going to be looking at alternative real estate investments. I know we talk a lot about renting to buy and the different ways that you can optimize that, but there are different ways that you can invest in real estate without having to buy a house or an apartment or even a block of flats. And that's exactly what we're going to be exploring and helping us better get a sense of these different alternatives. I'm joined this evening by Nicolette Mashile, who's the founder of Financial Fitness. Good evening, Nicolette. Thank you so much for joining us this evening.
Good evening, Zama. How are you doing?
I'm very well, thanks. I think before we even, dig deep into the different alternatives that, certainly viewers at home can explore, let's maybe look at why somebody would want to explore alternative methods. Because a lot of us know about, buying actual bricks and mortar. We're very familiar with it because it's something we can touch and feel. And there's also just quite a lot of sentimentality. But there are different reasons why somebody might choose not to go into that direction. Let's explore what those reasons might potentially be first.
I think one of the biggest things is definitely cost. To be able to buy brick and mortar sometimes is a big ticket purchase. So cost really does play a big role. But also, if you look in South Africa, traditionally it is quite difficult and a mountain for you to just get some sort of funding to get into property. So to get a home loan, to get any type of commercial loan to be able to purchase property is also quite difficult. But real estate also is an asset that needs to be part of your diverse asset allocation. So sometimes, you might be allocating a certain percentage of your investment funds, and you might find that the funds that are allocated or the percentage that is allocated to real estate is not enough to be able to acquire you brick and mortar. Then you need to obviously look at what other ways can you potentially still be invested in real estate and get exposure to real estate as an asset without necessarily buying brick and mortar. And then probably one of the most important important one is really the maintenance of brick and mortar, guys. It is quite a mission. I mean, just from, you know, owning one property or investment property, for rental, you are finding that tenants sometimes are a big problem. You know, tenants, when they are living in someone else's house, it's like they know they've rented the space. They don't really care about upkeep of your property. They don't care about taking care of your property. But also, if you have one property in your portfolio, chances are you probably don't have a manager that is managing those. So you're having to do it yourself. At any point, you can be woken up to say, hey, Zama, the geyser has burst. Hey, Zama, this doesn't work. I've got tenants even now who ask me, but it's that right that they've got as a tenant that I have a landlord. So I think also just, you know, the headache of managing brick and mortar sometimes can be off-putting for some people. So therefore they then look for the alternatives, and the alternative sometimes is quite attractive. But also I think diversification is another reason. I mean, if you had last year, if you had only invested in listed property shares, you would have taken a minus 28% knock, you know. So I think it is also about diversifying within the asset class itself that then gives you exposure to different ways in which you can tap into the real estate market.
You know, as you were talking about, you know, some of the admin that is managing tenants, I know a lot of landlords can certainly, you know, identify with that struggle, whether it's being called at 2 a.m. with a burst geyser, especially for the micro, you know, landlords, because oftentimes, as you say, you certainly don't have the resources to, you know, to get a managing agent, because you're thinking, it's just one property or it's just 2 properties. There's no need really for me to, you know, to get a managing agent. But just as you say, you know, that could be a headache. It could be quite admin intensive, and certainly the barrier of entry is quite high for quite a number of people, which of course then brings us to these alternatives, right? Because people are probably now thinking at home, okay, so I thought property is buying a house or buying an apartment. I don't think for many people, you know, a commercial building is even a viable thought at the moment, whereas you're actually able to access it in different ways, which we'll talk about, you know, shortly. So now they're thinking, so what are these alternatives? I actually wanted to first look at REITs because we've slightly touched on it, but let's explore what REITs are. I mean, some of our viewers who've been watching us regularly have an idea of what it is because we've briefly spoken about it before. So take us through what REITs are and how we can best utilize them.
So basically, when you are investing in a REIT, it's basically real estate stock, right? It's a company that primarily invests and owns properties or stock, commercial properties, all different types, whether it is office buildings, parking lots, hospitals. So they've got a whole lot of those. And what you would be investing in is a specific REIT. So it's a real investment trust. That's ultimately what it is. And I think also, you know, one of the most important things, and maybe before I even dive even deeper in terms of REITs, one of the most important things, Zama, that I've found with people that are investing in property is, you know, people don't seem to understand that when you invest in real estate, or whether it is brick and mortar property, is that you are actually running a business. And when you run a business, you need to know what the laws are that actually govern that business. Rental properties are governed by certain laws, right? So I find that when you do go into these alternatives, one of the things that you do take away a little bit away from yourself is the responsibility of knowing those laws. I mean, it is quite crazy how many times people will kick people out, evict people unlawfully, you know, just not even know what their rights are as owners and landlords. I think I just wanted to get that out of the way. But so when we go back to real investment trusts, REITs, if you want to call them that, it's really you investing in a company. So let's take, I think one of the biggest companies that I can think of right now is Liberty. Liberty has got quite a number of REITs because they own certain properties. So if you are at home and you're sitting and you drive into Sandton City, you will know that Sandton City is one of the buildings that Liberty owns. If you're driving around Braamfontein, you will find some office blocks that are owned by Liberty. Now, when you are investing, you are essentially investing in that company that then does all the work for you. So they essentially are going to make sure that the property is taken care care of. They're going to make sure that those property are profitable, and you just sit on the other side. Proportional to how much you're putting into this investment, you will then be able to get that out. So I think it's also something that people can look into. But again, it's one of the other things that people are going to ask is then which REIT do I pick?
Yeah,
and
that's a whole different conversation altogether. And if anything, I always say to people, you certainly don't ask stock picks and wanting to do a one-by-one thing, because it's not a get-rich-quick scheme, right? And I think people certainly need to always be mindful of that, even with property. That it's pretty long-term. When you were saying earlier that had people, bought into REITs just a year ago, they would have lost quite a substantial amount of their investment. And if we've actually tracked REITs' performance in the past few years, it hasn't been particularly great, in ways where every time you talk about REITs, the pushback is always, but have you seen the latest numbers? People are not making their money. So you have to take a very long-term view to, these investments, and not ask what's the one good pick that's going to make you rich overnight. Because as you're saying, it certainly doesn't work like that, unfortunately. And I do urge people not to ask which REIT. Rather, look at the different ones, look at their performance, even listen to what the CEOs perhaps have said about where the company's going, because that definitely does help in making the right decision for your investment portfolio. So Nicolette, let's look at the other type, which is quite tied to REITs, because REITs, as you're saying, is very focused on property. I know the other one that you like highlighting is listed companies that do invest in properties, but they're not necessarily a REIT. Can you take us through that a bit?
Yeah, so these would be companies that are essentially, so let's look at it this way. And I always say, in the different asset classes, you also are going to find a portion of real estate in them, right? So if you look at the stock market, within the stock market, you're going to find different instruments that allow you or give you some sort of exposure into the real estate market. Now, again, it goes back to the question of asking what is your actual investment objective so that you can select the correct one. So if you start off in the stock market, you're going to find shares. So these are listed companies that essentially are property companies. So the likes of your Bowen, the likes of your I can't think of any other property companies at the top of my head that are listed on the JSE. But those are now property. Yes. These are Rainbow is a very dark clouded one. So these are companies that are really just they are actual property companies. So they're not necessarily like REITs where they are investing in and buying properties. These are real property companies, right? So these are your individual property shares that you can invest into. Then you've got what is called your exchange traded funds, your ETFs that are real estate exposed ETFs. So these now would be actively managed funds, which also, like an individual equity, would also be on an actual stock exchange, and you can also invest into those. But they've got a nice mix. So they're not necessarily, some of them are purely just real estate, but different levels of real estate, offshore, local, all sorts of different types of real estate within that ETF. Some of them have a good mix, but probably predominantly the underlying asset would be then your real estate. Then if you move to even your bond market, you're going to find some bonds that have some sort of exposure within the real estate market. So I think, what is really important is that instruments will always just be instruments. If you are looking for exposure into real estate, you've got to ask yourself, and I think it's fundamentally one of the most important questions is, what do I want the real estate asset to do in my asset allocation, or in my diversification, or in my investment strategy? Because we know that property behaves a certain way in different market conditions, it is for you to understand how you're going to actually expose your own investment strategy to that asset. So I think that's when you will be able to start picking out which instrument is best suited for you.
And I think it's such an important point that you make, is that oftentimes, certainly when we look at bricks and mortar landlords or investors, they tend to just dive into it without first thinking, okay, so I want to now go and invest in property and I want to invest in actual bricks and mortar. What's my strategy going to be? Is it about capital appreciation? Is it about cash flow? How exactly am I going to go about attaining that? And then looking for the right property. Instead, a lot of people, find the right deal and they think, okay, now I'm going to be a property investor. And then you come up with hurdles along the way because you never clearly identified what your strategy is and you're choosing the properties wrong, because I think we underestimate that sometimes getting those first few properties is actually not that hard. Especially when you're a salaried worker and you can prove your income, it's not particularly hard, but what you then do with them becomes hard when you're not clear of what your strategy is. And that's why it's so important, to have a very clear investment strategy, whether you're choosing, conventional property or even alternative methods like we're discussing here this evening, or just broadly in your, investment savings and portfolio. So Nicolette, let's then look at the other type of alternative. I mean, we've certainly looked at, REITs and other listed companies. Let's look at, and this is one that's contentious right now because their business model has just been crushed. And I know some people are saying, no, it's not crushed. And I mean, there are different sentiments in the market around this particular one. And that's, of course, Airbnb. Let's have because Airbnb, depending on which side of, the spectrum you're on, there's certainly a lot of people who are big supporters of Airbnb. Others are like, no, that's not really a thing. And others are able to still, sort of rent out their Airbnbs right now. Even though we're currently in the middle of a global, pandemic. But let's go through Airbnb as an alternative. How can people, especially do it when they sometimes either already have that property or maybe don't, or have the additional property that they've bought specifically for Airbnb?
Look, I think I'm also going to throw a spanner in the works there with Airbnb because it's a conversation that I saw on my timeline the other day, and people were talking about subletting somebody else. So you go and actually get a lease and then you use that person's property as an Airbnb. And I'm like, please stop doing things like that. That is just shady, right? But I think, look, Airbnb is a viable model if you do own the property. I think that's the first step, is you got own the property so that you are able to understand what it is that you're trying to achieve with it, but also what would be the alternative if Airbnb is not going to be constantly working. And for me, it's a model that is highly dependent on availability of tenants, and I call them tenants because I mean not even tenants, visitors. I can actually call them because they're not really tenants, right? These are people that are passing by. How then, if you are really somebody that is trying to use Airbnb as an investment option, how do you actually even do your projections when you cannot actually predict what the market is going to be doing at what point, and whether you're going to be having any type of people being interested in that space or not, right? So I think the other thing that a lot of people kind of confuse with Airbnb is short-term leasing and short-term stay. I think people think that it's the same model, but it's not necessarily the same model, because for me, with short-term leasing, you can almost actually strike a deal with even a corporate company. You could go to a Standard Bank, you could go to whoever and say, listen, for all your visitors, for all your short stay people that come into the city, for instance, I will make sure that I partner this Airbnb space with a car, with whatever it is that they're going to need, so that I make it easy and available for them to be able to have accommodation when they come in. Now you've got a long-term contract that is signed, so you're not necessarily overly dependent on what is going to be happening in the tourist market or whatever it is. Now, on the Airbnb side, that for me, it's a bit shaky because I like predictability. I like to be able to predict a couple of things. Even in my budget, I'd like to create predictability. In my investments, I like to create predictability. So for me, if you are unable to create that predictability, how then do you actually say my investment is actually doing what I wanted to do? It's actually performing. I mean, generally for a lot of us, our investment options are matched with a financial goal or some sort of goal. Now, if your investment is not performing according to what the goal and what the timelines that you have put down, how do you even determine whether or not it's a viable investment or not? So I think that is really important for people to remember that. And then I want to get into the issue of subletting. Now, subletting, guys, is subletting is allowed to a certain extent.
You know what? Subletting can actually be dealt with in your lease agreement. You'll find that a lot of lease agreements are quite explicit in how it's not allowed. People who are able to bypass it are probably people who have lease agreements that don't make that particular provision. Then you go and sublet. But in the event where it is a provision in your lease, don't breach your lease. Don't.
Exactly. And I think it's also important to speak then to your trustees and have a conversation if your lease doesn't actually make a mention of subletting, because you might find that you've missed the AGM, and a lot of people miss the AGM. You've missed the AGM, and something like that, like for instance, in the estate where I'm invested in, we are not allowed to do AIRBNB. So you can't actually do AIRBNB because it actually does open up a lot of people to quite a lot of security issues. I mean, if you are constantly having people coming in and out, you as the landlord don't want to always be opening the gate for that person. So at some point, you're going to have to give them some sort of gate access. But that person doesn't live in that estate. They are not necessarily invested in the security of that estate. For them, it's a short-term stay. I'm here and I'm out. Yeah. So you're creating administrative issues already. So, and I always say for me, AIRBNB are probably better suited for people that already were in the business of actually taking in, your visitors and guests, and if it may be a hotel that maybe is not doing really well in that space, maybe portion a part of their business into AIRBNB. But for somebody like a Nicolette, who's really just like in my house, can you imagine? I mean, AIRBNB promises to keep you secure and to get you the trusted, safe people that are visiting your house. But now I'm just one female in South Africa. And yes, I've got additional rooms in my house and I'm opening my house up for someone else. I mean, it's just, there's quite a lot of nay than yay for me when it comes to that model.
And I think certainly something that we'll do as a private property podcast, have a separate conversation around Airbnb. Look at some of the people who've run successful Airbnb companies, because I know a few who, swear by it. I mean, surely right now, they're obviously not seeing the greatest of times, but before this pandemic, they were certainly seeing good returns. So exploring the Airbnb model and perhaps different ways that people who are already invested can still make their money, even though we're currently not experiencing as much tourism as before. We're going to go for a quick break, and when we come back, we'll be looking at the other alternative methods that you can invest in real estate. Of course, if you have any questions or comments, do send them through. I certainly want to hear from viewers at home. Which method are you using? Have you diversified your investment in different ways? How have you been able to do that? And of course, later on the show, it is the 3rd of July. We did promise that we're going to be announcing those 2 lucky winners who are going to be walking away with 1,000 rands. And the question that we wanted to know, we wanted you to share your property goals, dreams, and aspirations, and you stood a chance of winning that prize. We'll be announcing the winners later on the show. We're going to go for a quick break, and when we come back, I'll still be with Nicolette Mashile.
Welcome to your next home. This is the perfect room if you're looking to expand the family. It's perfect. There's a kids' room or a
playroom. I've heard about 2 people being raped.
Oh no.
I've been very bad.
You know what, let me give you a moment. I'm gonna feed the panic.
Yeah, you go feed the...
Welcome back to episode 59 of the Private Property Podcast. I'm your host, Zama. This evening, we're looking at alternative real estate investments, and to better unpack what these different alternatives are, how we can perhaps utilize them, and the best ways we can diversify our investment portfolio. I'm joined this evening by Nicolette Mashile, who is the founder of Financial buddy. Nicolette, so we've looked at, 3 already. We've touched on REITs. We looked at other listed companies in the JSE, and then Airbnb. I want you to stay with the theme, well, the relative theme of tourism, and look at one that perhaps a lot of people might not be aware of as much because it's such a unique niche, and that's, of course, timeshare. So what is timeshare? How does that even work?
Sure. I mean, I've had many conversations with these property mavericks and people that invest in property, and you tell them about timeshare, they're like, that's not investing in property. So, for me, it's definitely investing in property because at some level you are taking out money to be able to buy some sort of space. So timeshare, let's look at things like your Balitos, these beautiful places where we all would probably love to really just frequent. So what you're essentially doing is you're going to be taking up some amount of money so that you actually can book that space for a certain amount of time in a year, and hence why it's called timeshare. So it's a group of people that are essentially clubbing together to buy or to actually rent out a space, and every single year you either get 1 week or 2 weeks. Now you can have, they've got all sorts of different types of terms and conditions when it comes to your timeshare. So you can use the time, if let's say for instance you've got 2 weeks, 1 week where you and your family do go there for a holiday, and the other week you can then rent it out to people that want to use that space. So to maybe summarize a little bit better, Sun City, you own one of those is it cottages? I don't even know Sun City that well, guys. You own one of those houses, or you own a time in those houses, and you can select which weeks in the year that you are allocated to you. 1 week you and your family go to visit, the other week maybe Nicolette and her friends want to use the place, and you then rent out your time in the house to us. So it basically is that. I think for the more popular places, it really did work very well for people that went into it quite early, because if people are going to be frequenting that place, it makes sense. Also, you want to be buying timeshare in a place that has more than just that property, and I don't know if that makes sense. So a place like Sun City is great because Sun City offers you far more for years. So it's more attractive to you saying to a group of people, listen, I do have a timeshare in a specific space, you guys can go there during a specific time. Then again, it's also about timing. You want to also be allocated a good time, in the year, peak times, depending obviously on how much money you're willing to cough up, because it's also about what money do you have. Money talks, you know what I mean? So if you have the least amount of money, you're probably getting June. Who's going on holiday in June, in winter times in South Africa? So I think that's...
we certainly, and I like that you raised timing, Nicolette, because June we probably don't do South Africa, so we do. I know a lot of my circles. June will do Lesotho and we'll go skiing there, and there's a timeshare in the ski resort right there.
Yes, I think definitely Afri-Ski, that resort would be an amazing place for you to have that timeshare, because it's, that, and that's why I say for me, what would really be attractive is what other amenities are around that timeshare property that you are wanting to get into. So it is a good deal. And I think if I had a group of friends that were interested in that kind of a thing, perhaps maybe when we're married couples and we can go away, that's a nice timeshare, that 1 week
nice couples retreat.
Nice couples retreat, and if you really don't want to do the couples retreat, then you give it away to somebody else. But again, it is a business, and I think that's really one of the most important things that a lot of people forget. People think property is the holy grail. Property is the asset of milk and honey where you can literally just invest and then sit back. Even with the timeshare, if you're not going to be using that time, you have to also aggressively advertise your time. The property owner or the property manager will do their part. The company that owns the property will do their part to advertise because they ultimately have to, but you also have to do your part. So I think that's really also important, that people remember that every single investment, when it comes to real estate, every type of instrument does have some level of work. So just because we're saying don't go with rental property of brick and mortar because you're going to stay away from the rental issues and all that, don't forget that the others, even listed shares, sometimes you've got to keep an eye on them because they can do a whole lot of things, and you've got to do a little bit of changing and swapping and changing. You know what I mean? So I think it's really important that every single instrument will have, or every type of investment vehicle will have its own administrative things that you've got to keep an eye on.
And you know, Nicolette, as you were saying that, it actually made me think of the conversation that we were having briefly off air just before the break. You know, we were highlighting some of the alternatives, and one of them, of course, was Airbnb. And you know, off air, we were saying how you know, you mentioned how you actually know somebody who was unfortunately raped in one of them. So with every kind of way that you choose to invest, there are certainly risks. And unfortunately, as young women, because I mean, you and I are young women, and when we think of, you know, investments and the different ways that we can invest, and we think of something like Airbnb and opening up our homes to strangers, that's of course a consideration that we need to think of, especially given the reality that we're living in South Africa. So it certainly is something that we almost always have to be mindful of, because there are different things that happen. It isn't just this asset class and, oh, now I can open up, I've got extra bedrooms, I'll make a little bit of extra money. But it really is, you know, bigger than that. And you almost have to manage not just the financial risks, but sometimes even the physical risks when you're making these financial decisions and investments. Which, of course, then, Nicolette, brings me to one of my favorite alternatives. And it's a favorite because it's a very popular one right now. And I know viewers at home also quite enjoy this one, and they always want to know the different ways, you know, they can do it and how they can optimize it. And that's, of course, a property stockvel. Perhaps take us through property stockvelling. I know that one gets people very excited. I've seen some people lose money with it. I've seen people make money with it. But there are always different considerations when it comes to this one. Take us through how property stockvelling could be an alternative way to invest in real estate.
I think one of the things that a lot of people seem to forget about a property stockvel is the fact that we are actually borrowing the word stockvel and borrowing some of the ways a stockvel is run. And it's really the crowdfunding. At the end of the day, it's really just a thing of numbers will assist you into tapping into spaces that you might not be able to do by yourself, right? So at a very basic level, it's you are coming together with a group of people like you would in a normal stockvel, except this time you guys are taking the funds and you are actually cordoning them off to the real estate asset. And that's basically what it is. Well, that's basically what it's supposed to be. Now, I know that, I mean, it's funny that you spoke about how quite a number of people have poked holes into the Airbnb model. Here's another one where it really, you know, people have been taken for a ride with the property stockvel. And simply because South Africans are also, we're not really well aware of what are some of the laws that exist in South Africa, the FACE Act, what FSCA says about certain funds in the country. And I think to start it off and kick it off is just simply to say, guys, not anybody in this country can just decide that they are starting a fund. And the reason why I say this is because a property stockvel for some people is actually, it's modeled around what a normal mutual fund would look like. You know, it's really just a group of people coming together and believing that one or two or three of the people in that same group have the expertise to invest on their behalf in the real estate market. Now, it's problematic when you then go on and promise people a return. Sometimes the returns that are promised to people, I mean, they are way above the repo rate, 20% above the repo rate. You're already skidding into multiplication schemes. Multiplication schemes are illegal in South Africa. So I think it's really important for South Africans to remember that no one in this country, unless they've got an asset manager backing, can just, and registration, can just simply start a fund. So let's put that and park that on the side. So if you are investing in a property stockvel and somebody said to you, you're going to get some sort of return for the contribution you're making, please ask them for some sort of registration, because they need to be registered and they need to be actually regulated by the FACE Act. So that's number one. Number two, if then there's this other model where they say everybody's going to be on the title deed. And then I'm like, what?
So of all the different ways people have tried to scam people when it comes to, you know, property stockvel, that one is one I haven't heard.
Oh, you have not? Oh my goodness.
Everybody's name on a title deed. I have not heard that one. I don't know why I mean, that one is a difficult one to fall for. Why would you want a title deed with so many different people's names on it? So But you know
I don't.
I feel like we almost need a very separate conversation unpacking the do's and don'ts of stockvels, and because it's a very hot topic. I mean, I've certainly had different guests where we look into it, and some of them are running their own property stockvels and doing quite well. And I think one of the things that I certainly appreciate is the big thing that they highlight is the importance of governance in a stockvel, because that speaks to how people are either scammed or how they're able to, get value for the money that they're putting in. But unfortunately, people don't ask the right questions when it comes to stockvels. Perhaps take us through some of the questions people should at least, like the very basics you should be asking when somebody says, I have this property stockvel. And let's say they're not making wild claims of, giving you 20% returns. Let's assume this is a very legitimate property stockvel. You're just, sitting at home thinking, I found these guys. I think they're actually legit. What kind of questions should we be asking that stockvel before we actually then sign up for them?
I think one of the most important questions to ask is, what are we investing in? What is our actual investment strategy? So it's almost similar to if you are investing in a mutual fund with any of the big companies, you would get what is called a fund fact sheet, right? Now, a fund fact sheet is simply, I always say it's a CV of that fund. It tells you who the fund is, what the fund invests in, what type of qualification this fund has, or who are the people that are going to be investing on your behalf. So I think one of the most important things is, what is our investment strategy? What type of real estate are we investing in? Which types of real estate instruments are we going to be investing in? What type of exposure are we taking? I think that's step number one. Step number two, who are the people that are responsible to invest on our behalf? Are we just administrators? Maybe you've got a group of directors. Are they just the administrators that are going to somebody else who has the expertise to be able to invest in the real estate market? Or are we doing it ourselves? Is this a DIY? If it's a DIY, what type of expertise do you guys have? What type of qualifications do you guys have? I think that's really important, because as a person that's putting my money into something, I would like to know what the risk is that I might potentially lose my money. So if you say to me, you are just a Nicolette who has never studied property, who doesn't understand investing in property, and you're going to invest on my behalf, then I must know, Guti, there's a chance of me losing my money. You know what I mean?
Yeah.
So
I do, and I
must go into it knowing that there is a chance, of me losing my money. And then secondly, I think what's really important is, what is the exit strategy? What happens if I can no longer invest in this thing? How do I get out? What are the chances of me being able to get out? I mean, simple things like, you look at Kula Sizwe, the Kula Sizwe fund that was opened up by in partnership with Barlow World or whatever. Barlow World opened Kula Sizwe up. People understood from the onset that their money would be tied up for the next 5 years. You're not going to come back to Kula Sizwe and say, hey, it's been 3 years, where's my money? They told you from the onset 5 years. So if there's going to be a lock-in period for this fund, to try and give the fund a chance, or the property stockvel a chance to boost itself and grow itself, people must know from the onset. But if there are dire circumstances that I need to exit, what is available to me? What can I do to Then again, what happens on death? What happens if there is a death? Then also, what are the options for us if this thing is not performing according to how we have projected after 2 or 3 years? Because honestly speaking, we must give things a chance. But if you can see, I mean, how many of us lost money because of Braid? We all could see Braid was taking a beating in the market, and everybody kept saying, just hold, just hold, just hold. We held. I mean, my Braid shares have lost almost 91% of their value because I held, because I was told hold. But now, for some people, when you go into this, it is also important. What we did, we've also got a property stockvel. Ours is very closed. In actual fact, we've incorporated ours into a PTY LTD, and we're now governed by the Companies Act, right? So we are shareholders, and our contributions are shareholder donations. But as I said, it's closed up. We're not letting anybody in. But one of the things we had to do, Zama, even with those people, we had to sit down and say, let's do a purpose document. When as Zama, why are you doing this? Why are you getting involved in a stockvel? What are your expectations? What are you expecting as a return? How long can you be invested in this? And unfortunately, for the bigger stockfels where they are just letting anybody in, that could be a difficult task to be able to do, you know? So I think that's also something that you might need to do on your own and say, of all the investment options that I've got, why this one?
Yeah.
Why am I getting into this one? And then last but not least, one of the most important things you've got to ask is, sihlangana nini? When is the AGM? Who gets to speak at the AGM? What is my voting right at the AGM? Because
that's an interesting one, because I think in stockfels, because as we were saying earlier, I mean, stockfels is one of those things that we're all used to. We're used to it growing up. Our mothers did it, our grandmothers, our aunts, and governance was not as strict as certainly what you need it to be when you're doing a property stockfel. We know they met monthly because they rotate and whatnot, but it was also one of those things, sometimes somebody couldn't come, it wasn't a big deal. And as the years have progressed, and as we've seen different ways we can use stockfelling as a mechanism to raise funds, it's becoming more and more important, certainly for us, to get governance right from the get-go. I mean, I co-founded one with friends, and it's PTY governance is quite strict, and that's something that we're very clear in getting from day one, because it's one of those things that you don't want to mess up. I actually want to take in, before I let you go this evening, Nicolette, I want to let in our viewers at home who've been watching. They're watching from whether it's Facebook, Twitter, or YouTube. We've got a comment here. This one coming in from, it's a question and a comment. It's coming in from Flatambo, who says, I'm listening all the way from Papua New Guinea right now, and they are working there. Says, I'm planning to buy a 400 to 450K worth of property around Florida CBD or Windsor West sometime next year, hoping the travel ban gets lifted. Their question is, will you advise the property to be put under care of a manager?
Look, no advice, of course, because we don't do advice here. But I think one of the things that I did when I started investing in property, and of course, for him or her, there is the living in a different country altogether. But what I always say to people is, for the first one, try and manage it yourself. And the reason for that is you will want to get to understand what are the ins and outs of the business. If you don't do it yourself, you will not know the PI Act. I can assure you of that. You will not see the reason to know it. You will not read the lease when they're sent to you from the manager. And then one day you wake up and you realize that there's no escalation of 10% every year. And you're asking yourself, why didn't they put it in the lease? So I would really say, yes, a manager is important. It's a very, a team, the dream team makes the what? A good team makes the dream team. What? But I think it is
teamwork
important.
Makes the dream work.
Yeah. But I think if you do still have one or two, it is important for you to get to know, to understand. You also want to start building your own little black book of plumbers, your little black book of having, handy, yes, all those people that can come. You can still call in the middle of the night and they'll wake up and come to you and won't charge you too much of a call-out fee. So I would say yes, it definitely is a great thing to have a manager, and especially if you're not going to be in the country, maybe you need a manager. You definitely need a manager. But if you are in the country, you've got one or two, manage them yourself for the first couple of months. It is a headache, and let me tell you, you will get taken for a ride, especially when you're a woman. You will get taken for a ride, but you've got to be strong and you know the law, guys.
Yeah. And I actually like the fact that you're bringing up, being a woman. I think one of the things that we often don't talk about, certainly as women in property, and especially property investment, is how even when you're viewing a property, I've certainly found that I get asked about, my husband, are they going to be happy with the place? And often, I go to viewings alone. So sometimes you have to think about your safety. And once you've kind of parked the safety thing, even the questions that the agent is asking you are sometimes condescending or very sexist, because they think, why am I being asked these questions by a woman? And sometimes there's a racial element, because the agent might be white and thinking, but why is this black woman who's young? Because they probably know what your age is. So it's so nuanced, certainly as black women, which is quite unfortunate, because we're currently, such a huge chunk of people who are buying first-time homes, and we are quite a formidable block that should be serviced and adequately serviced, because we've got quite a big, quite a lot of buying power, certainly as young professional women. And that's something that I think certainly we need to be having more conversations about, because I know a lot of us have that challenge, that you are looked at differently, even the questions are different. So when you're managing your own property, even the tenant thinks maybe you're just like the same.
My friends, I promise you, you know, it's so, one of the biggest mistakes I made was when my tenant stopped paying, I went to try and speak to this person, you know, I was like, you're a human. Yeah, I was like, you're a human, I'm a human, you know, let's chat. Oh my goodness, she took me for a ride, and she undermined me at every level. You know, she acted as if I didn't understand what it is I was doing. She tried to bring in, and I said, no, we're not going to do that. Then they also play on your emotions. You know, it's like, oh, you know, they didn't pay me at work. And the thing is, you are human at the end of the day. You don't want to displace someone, especially someone with a child. So I'm actually, you know, I'm gonna confess something here. It's between me and you.
I feel like I know where this confession is going.
Close your ears. I am very discriminatory in terms of my tenants. I am absolutely, because also the way I was brought up culturally, you know, it is difficult for me to evict an older woman or an older man, because I'm just like, yo, what will my mother say, you know? So now I'm just like, no, I only release out to professionals that don't have children also, because children are a soft spot for me. So if you're not paying your rent and you've got a child, I'm like, oh my goodness, where's this child gonna sleep? You know, so I'm very discriminatory, and I know that sounds terrible, but the reality is I've learned the hard way, and it's just, maybe until I get a manager and I can separate myself from my tenants, then I will change the ways in which I actually lease out my properties.
And I think that's certainly, you know, a tip for many of us at home is there are different ways that you go about managing your portfolio. But the really important thing is, when you don't want emotions to cloud your judgment, it really is important to outsource that. I think one of the really good tips sometimes when you don't want to outsource it is be able to have a conversation with a tenant as though, I think it was one of the tips that was given by Robin Booth, who said, when a tenant is speaking to you, you must almost say, oh, I'll refer to the directors and come back to you with the message. Because this goes to taking your property business as a business, and that rental property is a business. So you do have to still go and think about what it is. You happen to be the director. They might not know it. And even if they did, there must be a sense of, this isn't just a Zama or Nicolette, you know, just doing this on the spot, but it's a business. Decisions must be made. So
and I think also quit having conversations on WhatsApp and on kids.
Yeah,
you know, we have conversations about things.
Those boundaries certainly do become important. Nicolette, before I let you go this evening, any final tips for viewers at home when it comes to, you know, alternative investments in real estate?
Look, I think one of the most important things, and from a personal finance management level, financial literacy, you've got to understand what it is that you are getting yourself into. I think that's really important. You know, if you're going to be investing in real estate, one of the things that you need to understand is, how does it fit into your investment strategy? And once you've got that, once you also know what your objectives are, I always use the analogy of you traveling. And I say, you need to know which car you want to get into to get to a certain place. Now, the only way you're going to know which car you need to get into is if you know how you want to travel, you know how fast you want to get to a place, whether speed is important to you, comfort is important to you. It's the same thing when it comes to investing. You need to know, am I looking for cash flow? Am I looking for income generation? Am I looking for capital appreciation? Am I looking for asset appreciation? Am I looking for just preservation? Once you are clear on that, it'll be so much more easier for you to be able to pick your investment vehicles, even within the real estate asset. And really, I can't stress enough that I know so many people who want to invest in property because they think it's easy. You know, a lot of people think it's just buying a property and that's about it. So I have many people come to me and say, when I turn 30, I want to have 10 properties. I used to be one of those people. 10 properties might just be 100% of your money invested in property. What happens when the property market takes a big knock? All your money is going to take a big knock, and all of a sudden your 10 million, 30 million rand portfolio now looks like 2 million. Now you're going to be saying, yeah, basoropile property, next. But it's because you did not invest in property correctly. So I think don't put all your eggs into one basket. Make sure that you don't get taken for a ride also, because remember that people will overpromise. In any financial asset, they will always overpromise performance. They will always overpromise what the asset will do. You need to always know what are the best market conditions for specific assets to thrive. Once you know that, Shem, you're well on your way to doing well.
You're going to be unstoppable. No one's gonna take you for a ride and promise insane amounts of returns, because you'll know which questions to ask. You'll certainly know the right kind of responses that you should be getting from credible people. And of course, because you're watching this show, you certainly are getting the right information. You're going to privateproperty.co.za under the advice section and getting the best insights that will help you make those property decisions. Nicolette, I'm going to let you go. Thank you so much for joining us this evening.
Thank you so much. It was fantastic being with you guys.
And that is Nicolette Mashile, who is the founder of Financial Bunny. That was an insightful one. I know we talk a lot about, the rent to buy and the different ways, the tenant-landlord, relationship can be best optimized. But of course, there are different ways that you can invest in real estate. And these ones are certainly some of the ones that you should explore. We're going to go for a quick break. And when we come back, we are giving away 2 1,000 Rand cash prizes to 2 lucky viewers who answered their questions around their property goals, dreams, and aspirations. You don't want to miss it. We'll be back just after this. Welcome back to episode 59 of the Private Property Podcast. I'm your host, Zama. It is that time of the evening where we give away cash prize to 2 lucky viewers at home. Of course, the question that we had asked was, what are your property dreams, goals, and aspirations? We asked you to share these with us on our different social media platforms, from Twitter to Facebook to YouTube. And we've selected 2 lucky winners who are going to walk away with that 1,000 Rand cash prize. And the first winner, and before I actually say who the winner is, I'm going to read what their motivation is, what their property goal, dream, and aspiration is, and then I'll say who that lucky winner is. And that person wrote, "Hey, Private Property, what can I say? My blood is green, Exe. Being a homeowner for the first time is one thing, but being a homeowner of a fully paid home is a blessing. And thank you for answering my questions on the podcast last week. My aspirations would be to refinance my home and to use it to purchase another property as an investment. I'm a mother of 4 kids and aspire to work towards setting them up for college and school. Furthermore, I would like to also renovate my home to accommodate maybe a separate entrance or a granny flat to use as a source of income. I'm in a good position to do so. Your podcast has empowered me with so much knowledge of what my options are as a property owner of a fully paid property, and truly grateful and inspired. Here's to aspiring goals and achieving them. Hashtag your space, your rules." And that's such an inspiring one. And we're really glad that you're finding a lot of value in these podcasts and asking the questions that you, of course, stuck with, where we ask our experts to help us better understand, some of the struggles that we have in our property portfolio and how we can best solve them. And that lucky winner is K Fortune. So K Fortune, congratulations. You walk away with the first 1,000 Rand cash prize. I do remember your question. You actually even asked on 2 consecutive days when you were telling us about, finally paying off that property and the different ways you can go about in refinancing it or using the equity that you have in that property. So congratulations and all the best with refinancing your property. And to your 4 children, it is, of course, such a big gift as a parent to be able to, set your children up as much as possible, and using property as the asset class, or one of the asset classes that help you do that. That, of course, brings us to our second winner this evening. And again, I'll first read what their response was. And they shared with us what their property aspiration is. And their property aspirations, they say, my property aspirations, I want to buy my home. I want it to be in a city, but isolated from the business of the city. Having grown up in a rural area with a huge yard, I want the same for my future home, preferably with a sea view and a lot of trees surrounding the house. I want the architecture of my house to be very modern, with an urban modern type of interior design. I want it to be huge, to be spacious, and to be designed for natural light. I really love that. And just to add on, my favorite room will be the library, where I'll keep all the important education I'll pass on to my future kids. I love that. I absolutely love that. I mean, north facing, sea views, who could ask for better? And that, of course, comes from Pioguhle Mthembu. Pioguhle Mthembu, congratulations. You walk away with that second 1,000 Rand cash prize this evening. Congratulations to both winners, and thank you so much for opening certainly your hearts to us at home and sharing with us what your property dreams, goals, and aspirations. Of course, the conversation always continues on our social media platforms. As as one of our winners, Kay Fortune, said this evening, her blood is green, and we're going to be continuing all the way. And because this is the last rendition of the Private Property Podcast on Friday, we are, of course, back on Monday at 7 o'clock. But over the weekend, you can catch up, or rather watch, the Developers Show, where we're still talking property and previewing some of the best estates the country has to offer. So that's the Developers Show that's going to be starting tomorrow afternoon at 1 o'clock. And you certainly do not want to miss it. It's one of those things that you're able to put down in your vision boards, or as you start searching what are the best estates you can, live in, whether as yourself or even invest in, or with your family. You'll get the right insight into what these estates have to offer. That's it for me this evening. It's been a really great week. We've given away quite a bit of money, and as many of you know, I enjoy this part of the show, and we'll certainly be keeping you informed on the next competitions that we're going to be running. But do keep in touch with us on our social media platforms, and let's keep the conversation going. Until Monday, I hope you'll be staying home and staying safe.
Hi, I'm Boy, and I'm an entrepreneur from Soweto. Soweto's come a long way, from a small township to a mini city of its own. Soweto's got some really, really nice suburbs, like Deep Kloof Extension, but the locals call it Deep Kloof Expensive. Orlando is known as a suburb that had the first brick houses built in Soweto. Orlando Stadium for its iconic games between Kaizer Chiefs and Pirates. And most importantly, Vilakazi Street, where Nelson Mandela and Desmond Tutu resided. To the west of Soweto, you find suburbs of Dobsonville and Protea. These two suburbs are actually very cosmopolitan, fresh, young, and very new. Right next door to Soweto, we have our neighboring suburb, which is Eldorado Park. For a little adventure and a little fun, Soweto's got so many night spots, from the News Cafe at Mponya Mall, to your Vilakazi Streets at Kumzi's, to just chilling at Chafpozi just between the towers and having a simple braai place, Chisanyama. Something very close to my heart is actually seeing people move back into Soweto, growing businesses, remodeling homes. It merely says to us that Soweto is a growing city. There's way more to this place than what we think. Soweto needs to be discovered daily. I'm so proud to call Soweto my home, and this is my neighborhood.
Welcome to your next home. This is the perfect room if you're looking to expand the family. It's perfect. There's a kids' room or a playroom.
Did you say playroom?
Yeah, playroom.
I've been very bad.
You know what, let me give you a moment. I'm gonna feed the pancake.
Yeah, you go feed
Okay.
the...